9, 8, 7, 6, 5, 4, 3, 2. Are you ready?
Let's go. We back at it again. So welcome back, family. Today, as you can see, we are going over the bearish engulfing candlestick pattern. So today's not going to be a long class because it's something simple. Yesterday we learned about the bullish engulfing, which pretty much was a drop candle and a long candle, right? So this is red, and then this one was blue. We're pretty much looking for buys, right? This up candle pretty much cover the previous candle. So this one engulfed the previous candle to keep going up on a bullish trend, right? So today we are talking about a bearish engulfing. So we have a down candle, a blue candle, and then a down candle, right? And again, remember, the previous candle is, there we go, boom, at least double the size of the previous candle. So this one, we see that the red candle engulfed the blue candle. So this one, this candlestick pattern, we're looking for more of a sell opportunity, right? Now, let me add this before I continue, right? So textbook will teach you to highlight the base, the last candle, wick to wick or body to body, right? From my experience of looking at the charts, I noticed that sometime we will have something like this. We saying wick to wick, but the price could come down, go up, come down, and like stop right there and come back down, right? Because we use just the blue candle, the up candle, But what I do is, like I said, this pattern is called a bearish engulfing candlestick pattern, meaning it has to be at least two or more to consider a pattern. So if these two together form the pattern, then I'm a zone both of the pattern. Again, determining how big is the red candle will give you, the discernment to know where to highlight it. But usually I will highlight both candles to give me the zone. Remember, at the end of the day, you want to be a sniper, then you want to get tighter stop loss and everything. That's the type of trader you want to be. The type of trader I am, I prioritize risk to reward first. So meaning I could have a bigger stop loss because my risk to reward is accounted for based on my account balance overall. So I could have a bigger stop loss, and let it play. That's why I'm more of a I have I use a bigger zone than a small, worrying about a smaller stop loss. At the end of the day, this is a 3-1, and my stop loss is like this one right now says a 24. And the reason why I marked it here, let's say this is 50%. Matter of fact, let me change this and go to our Ganda, because my Ganda has, see, so wick to wick, and this is my zone. Let's say I do 50%. Boom, price came into our zone and then dropped. You see, I use both candles to give me my zone, which is, the way I do it. Excuse me. Because of my previous back testing, I noticed that when you try to be a sniper enter, you miss a lot of opportunity. right? So let's go to the chart. Like right here in the beginning, we see one blue candle and then a red candle bigger than the blue one, right? So mark the whole thing, giving you a better entry zone. Because remember, the market will always give you 25% first. And look at right here. What we see here, we see how the market came down. Where is my, okay. We see how price came in here and gave us 25%. You know, 0 to 25. We got 1, 2, 3, 4, 5, 6. 6 candles gave us an opportunity to take this trade at the 0 to 25 zone, you know, and then 3 other candles gave us the opportunity to take the zone anywhere from 25 to 50. You see that? So again, let's say we took it at the 50, which is right here. Zone, my stop loss above the high, you know, this is the high. So we look left, and I would have used probably this one right here. I mean, what I'm doing. This is my stop loss. So if this was, okay, so if this wick was my high, right? That's my high. My stop loss would have been above this high because this high is big. It's higher than this one. And then my target, 3, 2, 1, and boom. There you go, 3, 2, 1. Right into the zone and give us the target. You know, even if you would have took the 25%, if your entry was at the 0, the 25, or the 50, and your stop loss above the previous high, you would have won this trade because this is coming up to the 50% and still hitting our target. You see that? So that was a beautiful setup. Now we have this one right here. We have a down candle with a large up. We have a down candle, a blue candle with a red candle. Sorry. Now you could mark up just the wick of the blue candle, just like that. That's what, you know, most people teach you to do. But at the end of the day, you will miss some opportunity. Okay, look, this area never came into our zone. You see that? But if you would have used both candles, now you saw that this came right into the 0 to 25 zone and went down. So if we would have used that, that's our entry, stop above the high. So if this was our high, this is the previous high. Boom. And then at least 3, 2, 1. And it's still 3, 2, 1 is 3, 2, 1 is down here, right? So right now, you would have entered the trade and you would have been, it gave you 44 pips so far. But there's a good chance for it to come back down here for the simple fact that if you see it, you see it. We have oh, that one didn't clear in the bottom, but this one did. We have an inverted head and shoulder right in the zone. Left shoulder, head, right shoulder. Boom. Beautiful. So this one, we have another one right above the one we just did. This one right here, blue candle, and then a red candle, which is double the size at least of the blue candle. You know, we mark wick of the high to the body. You know, you're going to use the wick of the red candle or the body of the red candle, or just the wick to wick of the blue candle. You know, for me, I would have used at least the body. You know what? No, to be honest, I would have marked the whole thing. It's a bigger zone, but like I said, I'd rather be able to enter a zone and enter a trade and have a little drawdown than missing a trade overall. Again, I would have had my entry at the 50%. Look at how it worked into our zone. This will be my stop loss, and then a target of 1 2 3, which it was right there. In and out. Well, not in and out because this is the 4 hour time frame. So this actually took from the entrance to my target, it took 12 hours, So that's a good, and this isn't a 4 hour time frame. So this was another beautiful setup. So do you see why I use both candlestick to give me my zone? Look, if I would have just used the blue one, it never made it into our zone. You see how it's right here and the candle right there. But if we would have used the body or the wick to be safe, definitely multiple opportunity to get into this trade, And I'm more of a swing trader, day trader. So I know that this is gonna play out probably a day or 2 or 3, depending. So I'm not worrying about the drawdown too much because I know you gotta let the market do what it has to produce. So that's why, as day traders, swing traders, we generally already know our stop loss due to our account size. How much we're really willing to risk and everything, and depending on our stop loss and where it's at, we give it in room, let it do what it needs to do. So look, if we would have entered on the 25%, or let's do the 0%, right at the box, right, and our stop loss above the high, that's 20 pips. When it was 25, when it was in the 50, we only had 10 pips. You see the difference? But now we at the 0, right at the box, we have 20 pips, and then our stop loss, our target 3 to 1. So that means we're making 3 times more than what we're willing to risk. So there we go. We still won the trade. Why? Because we already knew what we was willing to risk at our stop loss. So the pips generated on a stop loss didn't really bother us because we already knew how much we was willing to risk. So let it play, like my mentor always says. Let it cook. You got to give it time, especially you're a day trader or swing trader. Let the market do what it needs to do, and then let it hit your target. Because at the end of the day, if you analyze the market correctly, and they give you some drawdown, okay, it's supposed to happen. It's supposed to happen because they're trying to collect, more money before making the move that you analyze. You see, so if we would have had the 0, it went up. If we would have entered the 0, it went up 13 pip before dropping down and giving us 63 pips. You see, that's 60 to 63 pips. That's a good setup. That's a good setup at the end of the day. Let's do one more, and then we end it for today. Oh, look at this one right here. So, if you would have marked just the wick to wick of the long body, of the blue body, did it come into our zone? So this is the beginning of the blue, right? Boom. It came in here. So, right? So we would have had our, let's say the blue and our stop loss. This is the high. So previous high is this one, right? And then 3 to, at least a 3 to 1, which is, all right. right? This is extending to the right. Boom, we can see this is where enter. And it almost gave us the 3-2-1. But it never hit our stop loss. Why? Because we enter at the 0 and this was the high. Remember, our stop loss go in the previous high, which is this one. So that's what I did. I put my stop loss at the previous high. Never came to our stop loss, but it never came to our target neither. This is, again, when you learn how to properly trade as a professional, you're gonna learn about managing your trade. So this trade, even though it didn't hit your target, right? Which our target is down here. Let's put this and let's put it. What color? Green. Green for target, right? Even though it didn't hit our target, our stop loss, which was up here, right? And we don't put that red. We manage our trade. So the moment that it gave us this drop, we would have moved our stop loss into profit. Every time it created a broke structure, like this is downtrend, so every time it created a new lower low, we move our stop loss to the previous lower high. So right here, and then here, and then here. At the end of the day, this would have been our last lower high before coming back up, or depending how your training plan and your training rules are, you could have had it, closer to here, depending. But usually I do the last high before a broke structure. So you see how it came down and then pulled up and then broke down. I would have my stop loss there. So it would have took me out with, where is it? With 49 pips, our overall target was 119 pips, but depending how you manage the trade, you could have came out with at least 50 pips to, let me do this. So this would have been our entries right here. We could have had at least 49 pips to maybe 73 pips, depending how you manage your trade and trail your stop loss. So, family, at the end of the day, you seeing every little class that I uploaded so far, you see that it works. And it really works when you put them all together and come with the A+ setup, the money of all, the markup of all markups, But again, it doesn't work if you don't give yourself time to learn it and see it constantly in charts. And give yourself time to master this skill set. Because at the end of the day, this skill set could give you financial freedom. Like I always say, don't chase the money, chase the skill set, because eventually the money will come with the skill set, So family, thank you for tuning in. God bless you all, and I see you tomorrow. Let's go.